Oh,
Hi, Warriors. Dale Pinkert at TradeGATEHub.com, powered by TradeView Markets. I just want to start off with the dollar and give you some things to digest over the weekend and what my plans are going into the Fed, post-Fed, so that you are prepared to execute, and give you some ideas and scenarios to consider over the weekend. So the dollar has rebounded after taking out this prior low, but you look at it on a weekly basis, it's still a red candle, it's still negative. So I would expect some type of rally in the dollar into the Fed, and I'd say up here around 112 levels where I would attempt some dollar shorts. I know a lot of people are looking for new highs right away. I think there's at least one more shoe to drop towards 108 and possibly down towards 105 or so. The yen, although up today, I think there's a possibility that we're developing a descending triangle. And after the Fed, depending upon where it's at, looking for shorts in the US dollar yen, closes back under this 146 level, gives you a 140 target. I now want to cover gold. As you guys know that have been following me, I started turning neutral when the gold did not perform with the dollar weakening last week. The best I could do was, after being sharply lower, was recover to close slightly lower, no positive action. So it wasn't jet fuel for the market, for the gold and the silver. And we're now setting up for a capitulation move to the downside. Definitely going to be gunning for 1620. If you want to short it, you could be short here with stops over 1680, looking for 1580 or so. You're going to see some divergences in some of the metal shares. For example, one I own, a new low down here will set up a 3 drive to a bottom formation. I'm not sure that Newmont is going to make a new low. It's possible that it does, but what I'd like to see on this flush in gold is that the gold is much weaker than the miners, and that the miners hold up better. Getting to silver, if silver gets dragged along, and I think there's a possibility that can happen, and that silver flushes to one more low. Here's your weekly chart. I've been talking about this for a little while. A third drive would come in, shade under 17. I'll be backing up my truck here and believe that even if silver does break, and that's, you're talking about 220 from here, that's a 10% break from here. If that happens, some of the silver shares, which you look at the daily on this, we failed at the old highs. And if silver makes a new low, it's very possible that a lot of these silver shares make higher lows. That would be another very strong signal for both the bottom in silver, and that the shares are starting to show inherent strength against it. A big part of this is going to be yields. Yields had a pretty good pullback from last Friday, about 43 bips or so. So for the bonds and notes, they could rally back towards maybe 420 into the Fed on the Fed tightening and their statement. And I would also look to fade notes and bonds if that happened. And really, this could be, you get a failing rally, another failing rally in the dollar, a failing rally in yields, because gold and silver actually need, besides a lower dollar, they need lower yields. The lower the yield, the lower the opportunity cost of holding precious metals. And I do believe that we're headed back down towards the 3% level, and eventually here about 280. So this kind of fall in interest rates is going to be very stimulative in precious metals. I also believe it's going to lead to a weaker dollar. And I just want to close with having to recommit in the S&Ps. Yesterday, we had the terrible earnings over the last night. I believe it was, I forgot what really got decimated. So we took out this breakout line, spiked it, but I posted in our room that we held this moving average, And earlier in the day, I was showing the breakdown line, and if you go shorter term, a line means something if it's respecting it. And if you go back to right after the breakdown, we respected it, got over it a little bit, and then earlier in the day in the room, I said we're going to get back above it, and it's a buy signal. So S&Ps are having a good week. With all the negative earnings being thrown at them, besides an aftermarket session that was sharply lower on earnings, you have to respect the way it's acting. So whatever the Fed does next week, I think the market will be a buying opportunity. But want to really prepare you for this. I've been waiting for this, been developing for quite some time, this potential sell-off in gold. Maybe we trade 1580 to 60, but you're going to have all kinds of divergences in the gold at new lows after they flush out the week longs. And we'll see if silver could do it too, and pay attention to the miners during that sell-off in the physical and see if they're demonstrating relative strength. That would be a very good market tell. Have a great weekend, everyone. See you next week. Remember, don't just count your pips, count your blessings. Get ready for Fed week. I think we're going to be looking at some inflection points. Adios.